There's a one-line question near the top of every tax return that trips up millions of crypto owners, and answering it wrong, or pretending your coins are invisible, can quietly cost you thousands in taxes, penalties, and interest. The rules are actually simpler than the internet makes them. Some crypto moves are taxable, some are completely free, and knowing which is which takes about 7 minutes. Let's break down crypto taxes in plain English. What's taxable, what's not, and exactly where it goes on your return. Start with the big mental shift. The IRS does not treat crypto like money. It treats it like property, like a stock or a rental house. That one idea explains everything else in this video. You don't pay tax for owning property. You pay tax when you dispose of it for more than it cost you, or when someone pays you in it. Hold that thought, and the rest is easy. And here's that question. On the Real Form 1040, page 1, right below your address. At any time during the year, did you receive, sell, exchange, or otherwise dispose of a digital asset? Everyone who files answers it, yes or no, under penalty of perjury. It's been there for years now, and it exists for one reason. So nobody can later say, I didn't know crypto counted. Now the taxable list. Burn these in. 1. Selling crypto for dollars. Obvious. 2. The one that shocks people, swapping one coin for another. Trading Bitcoin for Ethereum is a sale of your Bitcoin in the IRS's eyes, taxable that day, even though no dollars ever touched your hands. 3. Spending it. Buy a laptop with crypto and you just disposed of property. If the coin was worth more than you paid for it, that's a taxable gain. Yes, buying coffee counts. There's a fourth category, and it's taxed differently, getting paid in crypto. If you receive coins as payment for work, as a reward, or from mining or staking, that's ordinary income, taxed like wages at its dollar value the day you receive it, reported on Schedule 1. And here's the tax kicker. That same coin starts a new clock, so when you later sell it, any growth since you received it gets taxed again as a capital gain. Now exhale, the free list, straight from the IRS's own page. Buying crypto with dollars and holding it? Not taxable. Hold for 10 years, own nothing along the way. Moving coins between your own wallets or accounts? Not taxable. That's just moving your property from one pocket to another. And if all you did all year was hold, you can honestly answer a no to that form question. The IRS taxes disposals and income, not diamond hands. Next, how much tax? Because timing is everything. Hold a coin more than 1 year before selling, and your gain is long-term, taxed at the gentler capital gains rates of 0, 15, or 20% depending on your income. Sell at 1 year or less, and it's short-term, taxed like ordinary wages at your regular bracket. Same coin, same profit, wildly different bill. The Day 366 sale can beat the Day 364 sale by thousands. Let's make it real. Say you bought half a coin for $5,000, and 18 months later you swap it for another coin when it's worth $9,000. No dollars moved, but you disposed of property. Gain for $1,000. Held over a year, so at the 15% long-term rate, that's $600 of tax. The exact same swap at 11 months, in the 22% bracket, $880. The calendar just moved $280. Now the good news hiding in a bad year. Losses work for you. Sell or swap at a loss, and that loss first cancels out your gains dollar for dollar. Lost more than you gained. Up to $3,000 of the extra comes straight off your ordinary income. Your wages, this year, $1,500 if married filing separately. And anything beyond that isn't wasted. It carries forward to next year, and the next, until it's used up. A brutal crypto year can quietly shrink your tax bill for years. Where does all this go on the return? 2 homes. Every sale, swap, and spend gets listed on Form 8949. What you got, what it cost you, the dates, and those totals flow to Schedule D. Income type crypto, the mining, staking, and getting paid kind, goes on Schedule 1 as ordinary income. And remember from our 1099 DA video, starting with 2025 transactions, exchanges send the IRS a copy of your sales. The era of they'll never know is over. Your paperwork just needs to match theirs. Which brings us to the habit that makes all of this painless. Records. For every buy, write down, or export, the date, what you paid, and the fees. For every disposal, the date and the value. Your cost basis is your shield. Without it, the IRS may see the entire sale as profit. Export your full transaction history from every exchange and wallet at least once a year. Today if you've never done it, because exchanges shut down and their records go with them. Your action list. 1. Answer the 1040 question honestly. Yes if you sold, swapped, spent, or got paid. A truthful no if you only bought and held. 2. Before any big sale, check the calendar. Crossing the 1-year line can cut the rate dramatically. 3. Harvest your losses. They cancel gains and trim your wages by up to $3,000 a year. And 4. Export your history from every platform this week and keep it with your tax documents. Quick recap. Crypto is property. Sell, swap, or spend it. Taxable. Get paid, mine, or stake. Ordinary income. Then a second clock starts. Buy, hold, and move between your own wallets. Completely free. Over a year gets the gentle rates. Under a year gets your wage bracket. Losses cancel gains plus $3,000 a year and carry forward. Sales go on Form 8949, income on Schedule 1, and the exchanges are already sending copies. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, and every rule in this video is checked against the IRS's own digital asset guidance. Educational always. Advice for your specific situation, never. Bottom line, crypto taxes aren't a trap. They're a calendar and a spreadsheet. Know the 3 taxable moves. Keep your records. Respect the 1-year clock. And the question at the top of the form becomes the easiest one on the return. For what the new exchange reporting means for you, watch our 1099-DA video next. It's the perfect part 2. This is general education, not advice for your situation. Talk to a pro about yours. Subscribe to the tax breakdown for taxes in plain English before you file, not after you overpay.